G'day folks, welcome back to another update for natural gas. Now it's hitting a double top on the daily chart and it looks like a possibility for a retrace. So I'll look at the charts in a moment. We'll include some back testing. Before you go any further, make sure you hit that like and subscribe button to support the channel, and also reference the Plus One videos to get a deeper dive into some of the trading strategies we talk about.
First, the fundamentals.
The natural gas market in late 2025 remains under pressure from tight supply, weaker than expected demand in key Asian markets, and a heightened geopolitical backdrop. Elevated prices persist with it as Europe grapples with low storage levels and disrupted Russian pipeline flows, while the Middle Eastern transit routes risk add further uncertainty. Although demand growth is muted in 2025, underlying structural drivers point to stronger growth ahead, especially in Asia, as new LNG capacity comes online. However, the market remains vulnerable to sudden shocks and supply disruptions. So first, looking at the weekly chart for natural gas, the price and the CCI is well above the moving averages, but notice we're getting a bit of a slight pullback on the weekly. And what next thing we look for is any divergence, and there's no divergence currently that I can see. That CCI is moving in line with the price. The last major divergence we had was back here, this bearish divergence. You can see there it broke down through about 23-38% very quickly. On the daily, however, we do have a still somewhat bullish on the price above the moving averages, but notice here the CCI is falling off. So again, I suggest just stand clear of any bullish or buying opportunities.
Stand clear, please. Stand clear.
I'd like to see the CCI break higher above those moving averages to continue in an uptrend. Also breaking through that resistance would be ideal. Now at the moment on the hourly, also we had a somewhat of a bearish divergence. You can see there the highs on the CCI were slightly lower, almost a triple top there, versus slightly higher highs. It's a very subtle difference, but still a bearish divergence. And you can see there it fell quite sharply after falling through those moving averages. And that fell, in terms of Fibonacci retrace, if we take it back to that low before that divergence started, you can see there it bounced right off that 61% range, which is a key area in Fibonacci levels. Now, in terms of the back test, we go to the back test going long. So before we go there, let's go back to the daily for a moment to show you where just ideally you would have started going long when both the CCI and the price started curving up like they did there. That's where you would have gone short, and we would have started going long from that period. And you still potentially can still be in a long position. And on the 1 hour chart for the back test, you can see they're starting from this area. Again, you can actually trade it with the price and the CCI when they're both in an upswing, and when they start to both turn down, as in that point there, you would have closed out your position. And that way you would have avoided that little drawdown, started going long in this little area when both moving averages were in an upswing, and closing it out roughly there. You might have had a position held, but you still would have been up in profitability. Avoid trading long or short during that little period, and then starting long again from that period. And this would have given you a warning for the CCI dropping off. Let it run with the price moving up, and you probably would have closed it out there. Again, holding it until possibly a position or contract held there, but you would have got out ideally at that point there. You could have let it run, but again, at the very latest, once you started seeing this bearish divergence happening, you would have got out at that point there and avoiding that drawdown. Where we are at the moment, again, trading long during that period, and you would have gotten out of the trade when the moving averages of the price and the CCI were in a downtrend. So looking at BOIL on the weekly, that CCI is still in a decline or possibly touching that moving average range. Notice the price has also broken into that moving average range. So if you're trading on the daily, we trade predominantly in direction of the weekly, which means you take only short positions, but at the moment it's neutral. So don't do any trades on this one, long or short, until we see a more decisive move one way or the other. Remember, we always trade with the trend.
Never trade against the trend.
So if you're trading on the daily, obviously trade in direction of the weekly. In this case, you wouldn't be taking any daily trends. If you're trading on the hourly, however, you'd possibly be going long at the moment based on the daily. And you can see that it's a bit of a consolidation area. Whenever you see these moving averages constrict like they have here, that shows consolidation. I'd like to see the moving averages separate like they were back here. They started to separate here, which is a positive on both the CCI and the price, which means we may see further upside. So if you're trading on the 1 hour time frame, we go in direction of the daily at this point. Both the price and the CCI are in a bullish mode. Looking at the hour, by the way, there's no divergence there. The last divergence we had is this little bullish divergence here versus lower lows on the price, and that's currently, you can see there, it's broken up into that 23-38% Fibonacci range. Looking at the 1 hour time period, if you're trading on the 1 hour, now here we had a bearish divergence. It broke down into our target area. In fact, it probably went down as far as, let's measure that, Fibonacci levels. Yeah, just below that 50% before bouncing. And currently on the hourly, we're in a somewhat neutral positioning. So again, I'd like to see that both break higher than the moving averages to be bullish and taking any long trades. Looking at the back test though, let's go to the daily for a moment. So based on the daily, we'd go long from this point around about the 26th of September. So even though it's fluctuating going sideways, you can still trade potentially both long and short, but again, it's a bit of a gamble. You'd like to take these little upswings on the hourly, and that's what the back test shows from the 26th of September here, going long during those little upswings and closing it out when the moving averages, both the CCI and the price, start to turn down, and avoid trading that little period, going long again, closing it out, going long, let it run, possibly when it goes sideways, let it run, and then closing it out when the moving averages start to turn down. And at the moment, you'd be possibly not trading it. Ideally, I'd like to see the CCI break higher again to be more confident. Although if you have got positions open at the moment, long and on trading on the hourly, you probably want to wait for the moving averages to turn down like they did here. You might take a loss depending on where you got in on the trade. Remember, if in doubt and you're in the money at the moment and you're in this situation where the CCI is turning down, it's better to take your money and run rather than potentially lose any profits you've got.
Take your money off the table.
So KOLD on the weekly is broken below the moving averages of the price and the CCI, so bearish momentum on the weekly, which means if you're trading on the daily, you can take short trades. Looking at the daily chart, that's also bearish, both price and CCI below, so nice little bear run at the moment. And again, just remember that we're going short on the hourly if you're trading on the hourly from the 20th of October. Looking at the hourly for any divergence or any other signs. Now we've got a divergence there, lower lows on the price versus higher lows on the CCI. And that actually bounced, so that could have already played out. So let's have a look at any potential further up moves. You can see there it broke up into that 23-38% range, which is our minimum target, just above that 38% range. And this could go either way, but again, we never know. Take it on probability. I'd like to see the CCI break lower to start going short again. So if you're not in a trade at the moment, wait for that to go short. Remember, we're trading in the direction of the daily. Now looking at the back test on the 1 hour chart, based on the daily, we go short from that period, from the 20th of October, as we said, taking that little short position there, closing it out when the moving averages start to turn up, going short again there when they break to the downside on both the CCI and the price. Now this one you could have let run. See the price pretty much consolidated. This was giving you a bit of a warning, higher lows on the CCI. You could have taken your profits or you let it run. Now in this case it fell further and you would have started taking your profits as soon as you started seeing especially the moving averages of the CCI there and the price starting to turn up. So you would have closed it out somewhere there. And as I said, you wait for the CCI to break lower to start taking any further short trades on this one. So for UNG on the weekly, that's bullish at the moment. Although just notice the moving average band is still in a strong decline, but that's a positive. If you're trading on the daily, you can start taking long trades based on that. So again, we also had this long-term bullish divergence versus lower lows on the price, and that could be the start of a bull run at the moment. We don't know for sure, so don't go trading based on the divergence. It just gives you an indication where we might see a bit of an upswing. On the daily, that's also bullish. So you can, again, based on the weekly, you can take long trades on the daily, and that's still in play with long positions. And again, that's where we would have started our going long. You could have possibly started it back here going sideways, but just for the back test purposes, I'm going to start from this area around the 17th of October. And on the 1 hour, again, notice here we've got a weakening CCI almost dropping below. The price is still in a bit of a slight upswing, but we might see a bit of a break to the downside possibly. So again, I'd like to see that break higher to keep in a bullish momentum. Going to the back test. So looking at the back test for UNG on the 1 hour chart, going long from this period, when the CCI and the price break above the moving averages, you would have taken that little trade, closing it out when they both started to turn down again, going long. Again, similar to KOL, or I think it was the BOIL actually, let it run during that sideways movement. When it goes sideways, it's a bit of a 50-50 chance it can go either way. So if you're in a long position in this case, you can take your money off the table, or you can let it run. Especially if you start seeing the moving averages bend down, that's when you close it out, obviously. Let it run. In this case, the price and the moving averages did turn down, and you would have closed it out somewhere there. Like I said, wait for the CCI to break higher with the price to take any further. If you're interested in some share trading ideas, we do run a portfolio on our Patreon page.
Really?
So these are some of the trades we've closed. Again, it's small gains, nothing huge, but I mean, better small than nothing. I like to scalp these shares, and it generated 11.57% since the 21st September this year. So to get access to the Patreon page, links in the description below. Hit that like and subscribe button. Thanks for watching, and see you in our next update.